Hello traders. Last week I had named my weekly analysis that whether the Nifty will be able to sustain above 25k or not. Well, clearly it has failed to do so, which makes me ask yet another question this week that will it give us a breakdown next week or not? So let's take a look at the Nifty. Let's take a look at the rest of the sectoral charts, and we will definitely use our RRG graphs and try and figure out are we headed for a breakdown or not. Okay, so here we are. I've added the monthly time frame to the leftmost, weekly in the center, and daily on my right. Looks good, not a problem. You will see an extra indicator which is on a beta stage. I'm working on this, which is using ADX and some averages of ADX to confirm the strength of the underlying trend, if at all there is any such trend. I'm using my usual next plus price indicator and momentum indicator, which is essentially the next RSI. So first things first, the weekly time frame has given us an outside bar, okay, which means a higher high and a lower low. If I turn this weekly chart over here, which is giving me a small bodied, high-legged Heikin-Ashi candle, and if I change this to a conventional Japanese candlestick chart, you will see a good-looking engulfing, an outside bar, as I mentioned, and it will, still continue to show us a 4-week consolidation congestion. Going back to the Heikin-Ashi, our trend indicators are positive. Our momentum indicator is positive. Our trend strength indicator, which is telling us whether the chart is trending or not trending, is telling us no, that's not happening that well. So with that in mind, what can we make sense of the weekly time frame is still a bullish chart, to be honest. It's a bullish chart which is going through a congestion consolidation. It's just that it's taken a month. It's just that it has not able to give us a sustained breakout. And yes, for short-term traders, it's turned out to be frustrating. For short-term traders, we will now focus on the daily time frame. And if I zoom in and I mark this entire range, you will see this is essentially mid-May to mid-June. That's where we are right now. So this entire month, the index has given a choppy behavior and has essentially not give us a proper breakout, a sustained breakout, which will give us clarity in terms of the trend. So short terms, or let's say short-term long trades would have fizzled out and got stopped out. And by the time you got some short setups, they were ready to bounce back. Frustrating, as I said. Going by the elemental reading, the trend, the Heikin-Ashi has just shifted down. Momentum indicators is shifting down. And the trendiness that was just picking up last week is completely gone now. Now, if I turn this daily chart, Heikin-Ashi, to a usual Japanese candlestick chart, you will of course realize this gap down. Now, this shows that one drawback, downside, whatever you call it, to Heikin-Ashi charts is the fact that they cannot show us gap ups and gap downs. So Friday was a gap down, but it wasn't a disastrous gap down. It opened down close to that 24,580. This is Nifty futures, but it managed a bounce back. And so did most of the sectoral charts. We're going to take a look at it. So in a very short span of time, to be precise, in just 2 trading sessions, the index, which was on the verge of giving us a breakout, is now on the verge of giving us a breakdown. Okay, that's not good news. So from a short-term level point of view, 24,580, 24,600 kind of level is the level which will lead to further downside. Any kind of a bounce back from here on, if we get it on Monday or Tuesday, that needs to be, looked at very closely with a pinch of salt. Because if the momentum continues to drop, if the trend continues to drop, then they may lead to further downsides. So we need to be a little careful. you need to be, on the lookout for follow through move. But the fact is, over a month has passed and we have not managed to go anywhere significant. We've stayed within a range. We've paid the price for any kind of a pullback trade or even a breakout trade. And I think this time it will continue. We need a proper follow through, breakdown, or a breakout. So, strategically, by looking at the Nifty, one should pull back himself, herself a little bit. If you're a, let's say, one long only trader, then this is not the best of the markets to go for long trades aggressively. So, drop the gear and just evaluate and watch a little bit. If you're into derivatives and you go long and short both, then last weekend you were looking out for long trades, and now this weekend you're looking out for short trades tomorrow. So things are changing, things have changed very quickly. So I would strongly suggest that if you are in the derivatives, futures, long, short, and all, yes, you can keep a lookout if there's any sector or stock which is giving you any kind of a short opportunity. With that, let's quickly take a look at the sectoral charts. But before that, a quick look at the mid cap and the small cap. The CNX mid cap and the CNX small cap, which both of them are very close to their respective all-time highs. You can see that. My personal experience, I have seen these kind of charts. They generally, when they come so close to a very important level like an all-time high, they generally try to breach that. In terms of the weekly charts, the momentum and the trend readings are fairly okay. The Heikin-Ashi reading is also pretty impressive. It's not been trending that much based on this indicator. As I said, it's on a beta stage. I'm working on this if I can, improvise the reading of our charts better. So I'm not going to put a lot of emphasis on that. I've just kept it and I've noting down few observations. So pretty good looking weekly chart, to be honest. Daily chart has just taken a breather. And after a exceptionally good trendy behavior, the daily chart is trendy really well. It's just decided to cool off a little bit. So no significant bearish signals. It's just a bullish chart is giving us a retracement. So broader markets, I would say mid and small caps are fairly okay. In fact, they have outperformed the majority of the sectoral charts. Now let's come to the sectoral charts. And I have already marked them, the views which are bullish and bearish. I'll explain them to you. But as we always do, we always take a look at the RRG graphs at this juncture. So let's go to our strike analytics page. And this is where we will go to this section, RRG, relative rotation graphs. The list is a long one, which covers a lot of Nifty 50, 100, 150, 250 and all those. So I'm not interested in those. So I'm going to take out those names from the left-hand side, mid cap, select, large cap and all that, and focus primarily on the key sectors without much overlapping. So that's why I've taken off infrastructure and consumption, commodities. You'll find a lot of overlapping between metals, commodities, and all those. So taking off these names and only focusing on the core ones. There you are. Now I'm going to change the benchmark, and from Nifty 50, I'm going to shift it to Nifty 500. Makes more sense. Then I'm going to come to the daily time frame. I'm going to come to the time frame. I'm going to change the daily to weekly. And now to the count, I'm going to take it up to around 12. That's around 3 months. Yeah, 12 to 13 weeks is completely fine. So that's 12 weeks. Let's fit this RRG graph. Let's sort in terms of percentage change. That's here. And let's start in a clockwise manner with the leading quadrant. PSU Bank and oil and gas. These are the two sectors which are in the leading quadrant, out of which PSU Bank, we clearly remember, has been doing a catch-up game. And let's call this the head of the worm, is more or less within the leading quadrant. And it's okay. It's got itself a little bit of relative strength. It's losing a little bit of momentum of RS, a tad bit. But RRG graph of the PSU Bank tells us a bullish sector. If this sector shows fresh strength, one should go long. One should not go short on this sector based on RRG graph reading. We'll now go to our chart, take a look at the Nifty PSU banking chart and try and figure out what is the actual price telling us. Weekly charts, pretty impressive, not a problem. Yes, it has been doing a catch-up game with the private sector banks and the other financials. And of late, for the last couple of days, it has come off, and that's why it is retracing. This is a bullish chart, very, very similar to what we saw in our mid-cap and small-cap charts. So are there any signs to go short or negative? Not really. There was a negative divergence which was marked by our RSI indicator, very clearly this red line. And that's why there was a contra short kind of a behavior. But apart from that, the weekly chart is not that bad. I would still maintain a bullish bias, but from a short-term point of view, the idea is to mark these sectors green or red or leave them depending on whether I have an actionable view from here or not. Because my weekly charts are very strong and because my daily charts have just started to cool off, I wouldn't like to mark them red or green. I would like to see the daily charts reversing for some bullishness and then would like to mark it green. And that is why I have left it unmarked. Bias is bullish, but I don't have a rationale to go long. That's why I'm just waiting out on the sidelines. These colors are, I could have given a yellow or something else, but I don't want to confuse myself or you if you watch these videos periodically or, follow my work. So let's leave it. Bullish bias, not a trade yet. Now, the fact that we are talking about PSU Bank, we can quickly cover the banking and the financials and then go back to RRG graphs and see where are they placed. You see, Bank Nifty, and the CNX Finance, I've been repeating this in my weekly analysis, were the first two indices to hit an all-time high. So they are your relatively stronger sectors, pockets of strength. Weekly trend, weekly momentum, weekly charts, trendiness, if I may call this, are all positive. It's just that it has gone through a breakout failure, or should I say it's going through a breakout failure. And so the daily chart has given us some early signs of weakness. Weekly chart is still very, very much intact, very similar to the contradictory readings we had from the CNX PSU chart, banking chart. And so the view is bullish, but early signs of bearishness, weakness, and so we should stay away from it. Can we go short? We don't have a confirmed short setup from the daily. And even if I have a confirmed short setup from the daily, it's not very, very promising because of the strength in the weekly. And not only strength from the weekly, it's the sector which had moved to an all-time high. So it's a very strong sector. So keeping all those pointers, Bank Nifty, I have purposely left it unflagged. Yeah, if Monday it gives me a bounce back or Tuesday, and if my trend indicator goes red, my RSI turns to go red, if the sentiment of the market is weak, if the news, if the Nifty shows weakness, a short-term trader may attempt a short trade, keeping in mind the weekly charts are strong. But as of now, as I'm making this video for you, I don't have that clarity, and so I am not flagging it. Okay. With that, Bank Nifty and the private banking chart will give you similar kind of a view, similar kind of a chart, and so similar kind of a view. CNX Finance also will give us same view. So bullish chart showing early signs of weakness, not worth going short right now. But yes, going forward, if I have a confirmed setup, who knows, maybe we can attempt a quick short trade. With this analysis understanding from the PSU and the other banking pack, if I quickly take a look at where does Bank Nifty stands in the RRG graph, where the Nifty private banking stands within the RRG graphs framework, and where does the financial. So you can clearly see that Bank Nifty, private bank, and finance have been losing vertical distance. And we've been discussing this week after week. They are significantly away from the central point, which means their relative strength is the max. They enjoy the maximum relative strength, but they are losing momentum of that relative strength. So these kind of charts, they do have the tendency to bounce back. And if they continue to weaken further, that will mean that, yeah, I might start to get short setups from the daily time frame. So that's why I think it's prudent that keep it unflagged, just wait and watch, observe. Wait and watch, observe for the week ahead is our view from the Nifty as a top-down approach. And so if my overall view from the Nifty is wait and watch, then it is very obvious and meaningful that I will have few sectors which will be wait and watch, right? So yeah, let's see. Going back to the leading quadrant, in this RRG framework, we have Nifty Oil and Gas. Now, Nifty Oil and Gas and Nifty Energy, both of them are fairly overlapping. And you will recall that both these graphs, both these worms on the RRG were traveling left to right, that is gaining relative strength, but off late they've been dropping a little bit. This is the Nifty Oil and Gas, and this is the Nifty Energy. Both of them going left to right. Now, going left to right means gaining relative strength, which means that they should be holding well to their recent gains. They're dropping a little bit. It means that they must be losing a bit of their steam. A bullish chart losing a bit of steam. Is that the case? Let's take a look at the CNX Energy. Now, the weekly time frame, which is the central chart, pretty good trend, pretty good momentum. Trendiness is not much there. That's because of the extent of the bearishness it has gone through. And so predominantly a bullish weekly chart, again going through first bout of weakness. Very similar to what we saw in the banking, in the mid cap, small cap, right? So is there any actionable point? Not really. The actionable maybe can turn out to be from the daily on the downside. From the weekly point of view, we need a proper breakout. Till that, stay away. What's the point? We can see a chart which has given you a breakout. The breakout is on the verge of a failure. So better to step aside. And that's why CNX Energy, I have unflagged it. These are, please understand, predominantly bullish weekly chart, just have started to weaken a little bit. That's where we are. And so going forward, very important is, do we see a reversal and continuation of this chart, or do we see a reversal, or should I say a breakdown from the daily and reversal from the weekly? And that's why this is the phase where we just step aside and just observe what happens next. Those are the two. That's the PSU and the oil and gas, which was in the leading. We have covered oil and gas with energy as well. Now let's come to the weakening. Now, weakening, we have covered the Nifty Bank, which is the Bank Nifty, the Private Bank, the CNX Finance, and the Nifty is also there. So Nifty vis-a-vis 500. Now, quite a bit of an interesting names in the red quadrant, which is the lagging quadrant. We should start our discussion with the Nifty IT. The weakest amongst all the sectors when it comes to relative strength, but it has been picking up momentum for quite some time. I would say a month and a half. Last week analysis, if you remember, we discussed that Nifty IT is a make or break. This is one sector which is definitely going to give us a move. Which direction, that needs to be seen. It gave us a move on the upside. We got a very good looking icon, a breakout, right after an HAGB, which was a consolidation bar. The trend, the momentum has been supportive. It's not the trend indicator, or should I say the strength of the trend indicator is not giving me that kind of confidence. But overall, pretty good move. If you remember, last week's Monday, Tuesday, Wednesday was more like a consolidation for the Nifty. That was the phase when banks and private banks, financials were coming down, which was beautifully counterbalanced by the breakout in the IT. IT, if you come to the daily time frame, and if I change this icon to candlestick, probably this is the only sectoral chart which has scaled above Thursday's low and closed above Thursday's low, right? So this has definitely shown us enough strength. Range has expanded. It's a wide ranged bar because of the gap down and bounce back. Daily trend, positive. Momentum, positive. Trend strength indicator is just picking up, which is telling me that, listen, from here on, there is a possibility that this chart may trend. Please note something. Indicators do not dictate price behavior. Indicators indicate. Price behavior dictates the behavior of these things, right? So we had a bullish bias from the weekly. Now the bias is also bullish from the daily. So for all due purpose, we should mark it with a green flag. Triggers going forward from for the next week is going to be Friday's high and low. Very important. Any move above Friday's high, we can definitely expect further upsides. If it slips below Friday's low, then of course the uptrend, up momentum is under threat. That's IT. So now the first sector which we are going to mark green. Moving on to the next, we have the healthcare and the pharma. This healthcare pharma has been confusing us a little bit. Why? If you remember, the RRG graph is been traveling right to left, losing relative strength, and also angling a bit down, means the momentum is also going away. RRG graph reading tells us, listen, this is not a very bullish chart. If you get a short setup, go for it. If you get a long setup, do not go for it. Something like that. And every time we have read the RRG and every time we have come to the CNX Pharma, we've seen that it's just not kind of confluencing that well. Why? The weekly trend has been positive for some time. The weekly momentum has been supporting. Yes, the test of strength of the trend has not been there, but majority of the readings are positive, were positive. And last week we got a breakout. We got a good move. That has helped the daily chart also to improve significantly. So very similar to what we just read in the IT pack, that the weekly charts were positive, the daily has now turned positive. We see the same thing here. And so I've marked the CNX Pharma with a positive flag. The CNX Pharma, when I take a look at the Heiken Ashi, worries me a little bit with this bearish Heiken, which was not there in the CNX IT. So I would like to see the pharma giving us a little bit of an upside move with a positive shadow, with an upside shadow to be precise, upper shadow on the Heiken, and that can confirm that yes, we are headed further up. But going by the look of these charts, clearly a positive chart, we can expect further upsides. Going back, who's there? Metal is there, consumer durables and FMCG. Let's take a look at FMCG and consumer durables side by side and try and understand. FMCG has been within this narrow range, but if we take a look at the head of this worm, it's moving up to down and right to left, weak RRG readings. Consumer durables, if we take a look at it, it's in the lagging quadrant. It's picking up a little bit of momentum. Its relative strength is way far away from the central point. See, remember, FMCG's head of the worm is here. Consumer durables head of the worm, I'm calling this wiggly line worm, is here. So consumer durables per se is weaker than FMCG. But the momentum of the RS, FMCG is losing, consumer durable is gaining. This is not going to be easy. If we come to the chart and take a look at FMCG, if we take a look at the weekly charts, we've got a pretty bad close. The trend which was up, was trying to give us some kind of a pattern breakout, has now failed and opened on the downside. Trend indicators have kind of flattened. Momentum indicators have flattened, so not much clarity from there. Heiken, we have a negative Heiken 2 weeks back. Monthly charts, of course, is in a beautiful negative sync, so negativity coming from the higher time frame there also. Daily, fresh breakdown, pretty sharp breakdown. If I turn the Heiken Ashi to a Japanese candlestick chart, you will see that it wasn't a very good bounce back for FMCG, like an IT and all. It did not bounce, could not bounce. So going back to the Heiken, negative trend, negative momentum, trendiness is just picking up, which is trendiness on the downside. so it makes sense to mark it red. It doesn't make sense to chase because of the difference between last week's range on the Heiken. So any kind of a pullback is definitely going to open up opportunities on the downside. It's got supporting evidences from the weekly, it's got supporting evidences from the monthly. So not a bad sector to mark red. What about consumer durables? Consumer durables, the trend is still positive, but it's kind of plateauing out. Momentum is still okay on the weekly time frame. Again, 2 weeks back, we had a negative Heiken. Monthly charts very similar to FMCG weak. With these, when we come to the daily trend has turned down, the momentum has turned down, the trendiness is just picking up. Same logic with the FMCG, it's consumer durable. And between these two, both are weak when it comes to the daily time frame. In both the cases, I will suggest wait for a bounce back. As long as the trend is negative, as long as the momentum is negative, it will, not will, it has a propensity to open up on the downside. So we'll keep this back of our mind. We'll see what happens next week. And the last sector, which is there in the lagging quadrant within the RRG framework, is the Nifty Metal. The Nifty Metal has traveled quite a bit, quite quick, from leading to weakening to lagging, and now the head of the worm is right there. All right, so it's in the lagging, it's losing steam, and let's take a look at how Nifty Metal is positioned on the price charts. Weekly time frame, trend looks good, Heiken also all right, momentum is okay, trendiness is not there that much. That is primarily because of the choppiness it has gone through recently. So not a bad weekly chart. When we take a look at the daily, I do see a bit of a divergence playing out, which needs to be given a little bit of importance. I see momentum slipping a little bit, Heiken going negative. And so early signs of weakness on the daily time frame. Pretty decent, strong behavior from the weekly, just like what we saw in small caps, the mid caps, the Nifty and the banking charts. We had unflagged them. We want to wait out and see what happens. And that's why CNX Metal, you wait out. Please understand, if you're a long only trader, the coming week for you, you should step aside and not look to do much. If you are a derivatives trader and you look to go short also, then these names, which are weakening on the daily, are the ones where you have to look out for a pullback and an extension of the pullback. So metal, not going to do anything, I'm just going to observe. Which takes us to the improving quadrant. And in the improving quadrant, we have auto and realty. We also have the energy. We have discussed energy with oil and gas. So comes auto and realty. Auto has been kind of stuck within a very narrow range from the central point, from the 0 point. It's right here. The behavior is pretty good, impressive, because it's moving left to right, it's moving down to up. So this kind of a behavior gives us bullish readings based on RRG. Look for long trades, do not go for short trades. That's the kind of feeling that the RRG is giving me. If you take a look at CNX Auto, what's happening? The weekly charts trend, momentum, pretty fine, has been going through consolidation. It's created a huge outside bar last week, which is really frustrating. So the weekly readings are bullish chart, consolidating. The consolidation on the daily chart, the consolidation which we see on the weekly, when we take a look at the daily chart, gives a sign of fresh downside, momentum slipping on the downside, trend not the strength of the trend is not there. And so I will unflag it. I'm not going to go bullish or bearish. To go bullish, I don't have any trigger. To go bearish, I need to wait for a trigger that is a pullback, and then I can act upon it. So all these which are blank can turn green or red. The probability of them turning red is very easy because the markets had just given us a gap down. And so within Monday, Tuesday, we can get short setups. The probability of getting a green flag is distant because it has to scale up and give a breakout above last week's high. And then they will turn positive. So the chance of them going into a green flag is relatively less at this juncture. And then we have the last one, which is the real estate, the Nifty Reality. This guy has performed exceptionally well. You will know that it has been picking up momentum of the relative strength continuous for almost 2.5 months now. Good looking behavior, left to right, down to up, bullish RRG. In terms of price, we come to Nifty Reality, and we see, yes, one of the only sectoral charts wherein from the weekly point of view, we still have a positive Heiken, a bullish Heiken, not positive, bullish Heiken. Anyways, trend indicator, clean, momentum, clean. Trendiness is not there again. This is primarily because of this one, this fall. So we understand that. Come to the daily. So weekly is positive. Come to the daily, fresh signs of slowdown, momentum slowdown. It had a great run up with momentum, with trend, with strength. Everything was there in this move. And so now it has decided to cool off a little bit. Do I have a long setup from the daily? No. Do I have a confirmed short setup from the daily? Not really. There is something, but if I act upon that, I'll land up with a very, very wide stop loss. So it doesn't make sense. So what do? I wait for any kind of a short. Will I like to go short when a chart like this? Ideally, no. Ideally, what you would like to do in these kind of charts is once they come down and they start to reverse a little bit, you would like to go for some breakouts. I have purposely marked it green. The CNX reality is primarily purely based on the strength of the weekly time frame. We're not ready, so I think ideally by the flow of the flag, I should unflag it because I do not have a long setup. I want to go for a long trade. I'm going to avoid any short trade, right? So got some clarity in FMCG and consumer durables from a weakness point of view, and we got some clarity in the IT and pharma from some strength point of view. Now, this does not mean that FMCG and consumer durables will fall and IT and pharma will go up. Of course, banks and ITs and auto and energy will go up and down. It's just that at this juncture, with last Friday's close behind us, we do not have the clarity to act upon them. We have a view. We know the banks are positive going through weakness, auto is positive going through weakness, etc. But we do not have a trigger. And so I think based on Monday's close or at max Tuesday's close, we will start to generate some triggers. It may primarily be on the short side because the market is at the lower bottom of the range, that is the Nifty at the lower bottom of the range. So getting short setups is going to be very, very easy. So if you are in the derivative segment, you might look out for short trades. And as I said earlier, if you're a long only trader, take a break, observe, take a look at what the sectors and the large caps, mid and small caps are doing. Try and figure out whether the market is ready for a breakdown or will recover and give us a breakout or not. Right? I hope these videos help you. Do let me know. Till then, take care of yourselves. Prepare well for the upcoming week's trade. And of course, take care of yourselves. Goodbye, everyone.